Good day everyone, welcome back to Pete's Investing. This is another variation of the CCI1500 with a weighted moving average 400 trading strategy. What I have here is the daily chart and the 4-hour chart. And we're going to be trading on the 4-hour chart, but we're going to be using the daily chart as one of the entry criterias. So how it works, and before I drill down and show you the strategy, we want to make sure that the daily chart is in an uptrend. And what I have down here is the CCI1500, and I've applied the weighted moving average of 100 to this. So the weighted moving average 100 is the red and blue line you can see here. So if you look at that in a bigger picture, there'll be a jagged line which will be the CCI1500, and I've removed that. So just simply showing the weighted moving average of the 100 of that CCI1500. So we want to make sure we're in an uptrend on this CCI1500 weighted moving average 100 before we enter. So the way that looks then, I'll draw a couple of lines to show you where to trade between. So you can look at there when it starts turning blue, give it a few more days to open up. So you can see there we start trading there at that point. And we stop trading on the daily. Let's give it a, say about there, just before it turns red. So what that looks like on the 4-hour chart is this period. So we would have had all those trades executed. So the way it works on the 4-hour chart is same as the daily. We only take the uptrend. So when that is an uptrend, we open the trade. And look closer at this chart here. What this shows is the gap between the moving average on the price chart, the moving average 25 and the moving average 30. So as if you drill down really closely on this one, so you can see here, for example, as this is a simple moving average 25 breaks above the simple moving average 30. You can see there it's diverging, they're moving apart. That's demonstrated by that blue line there. So the moving averages are moving apart. So that's just a little calculation on between those two. And as they start converging, moving together, it starts turning red. Then they start moving apart again, blue, and so on, until they start moving together. It does that. And if you move over on this example, you can see here they moved apart, moved together by the red line. A couple of instances of just sort of bouncing between, then moving apart again, and then converging and closing and crossing over. And that crossover is demonstrated moving below the zero line. You can see there now, it's in a short trade at that point there. So the way this works is, make sure you only take the long trades. So I'll zoom out again. So you make sure you only take the long trades between this period, which coincides with this period of the daily chart. And you only take the long trades into long when those lines are blue. And so that's the entry. And to exit, as I said, when you see a red line, so you could have potentially exited at any one of those red points. Now the other criteria of exiting is you want to make sure you're in a profitable position. So you can see here the program running. It opened up there. It's indicated by these little bars. It opened up there on that blue line, okay, saved it for a few bars, a few 4-hour bars, and it closed it out with a little profit. Opened up another entry on one bar, and it closed it out. Opened up there on that point there, they were diverging, and it closed out. So it wasn't profitable at that point, that's why it hasn't closed out, and it closed it out at that point there on that single bar, on that second red line. So again, it didn't close out on this red little downturn because there wasn't any profit in the trade at that time. Now you'll notice again the average down approach we don't use stop losses. At this point here, at the peak of this point in the chart, we opened up one contract and then the price dropped off. So we don't close it out because it's in a negative. We enter another contract there, turns blue there, and it's in an upswing. and then we finally close out there both those contracts with a profit. So where does our program sit on our ranking table? So again, just repeating what this table shows, all the programs tested to date. And this one here highlighted in green is the one we ran today, which is the CCI1500 with a weighted moving average of 100. So this ranks 9th overall, and the way this works is we tested against these indices: the Aussie 200, the US market, gold, silver, Germany, and the FTSE. The top table shows the respective, this is run on a 4-hour chart time frame. The top table shows the revenue generated by each of those indices. This down here shows you the sum of those, 90,340, and this shows the average of each of those, 15,057. This second table shows the drawdown of each indice. So the drawdown is from the highest level point of profitability to the lowest level of any given period, and that was a total of 43,399. So basically the last bit is the profit over drawdown percentage, and that's basically the profit generated, or the revenue generated, divided by the drawdown gives us a profit over drawdown percentage. So that just gives us a total of 210% average overall, which ranks 9th in our programs tested. I want to show you just in terms of the data tested, that looks at all the time periods. In other words, I don't pull out only the upward swings, so that includes also any down swings. So you can see here on the US 500 or the S&P 500, it also ran, the program also ran on the downswing, even though the suggested method is only trade the upswings when you're going long. Of course, if you're going to trade short positions, only trade the downswings on the daily chart. So this also tested on the long positions across the whole period. So just emphasizing that as well. Okay, so that's not too bad a result overall in terms of our programs tested. Okay, so that's the summary of the CCI 1500 with a weighted moving average of 100, and again only trade on the daily direction. You take the 4-hour chart trades on the daily direction only and ignore the downtrend of the daily chart. Don't take those trades on the downtrend. Okay, if you like this channel, hit the subscribe button, the notification bell, the like button, and I'll see you in a future video.